everybody doing good?
Yes, sir.
Okay. CPS, welcome to Atlanta. This is a great opportunity for me to share some few stuff with you guys. Ms. Atom called me, tell me about this symposium. And I was like, well, I really don't know what I can actually share out there that would be a little bit more valuable. So I have to dig a little bit inside to come up with this and say, this might be something good for me to share with you guys. The main purpose of the symposium is actually leveraging opportunities in the United States and in Cameroon. I've not been home for a while. I've been here quite some time. But I think in leveraging those opportunities back home, you need a source of income for you to be able to do this, or a good pot of money to do this. And I've always figured out that tax preparation that we do here, which I don't know if they do that in Cameroon, but we do it here, is always a good way for you to actually get a good chunk of money if you know what you're doing. How many of you guys prepare your own taxes? 1, 2 people. So most of you don't do your own taxes because apparently you're not well versed about what you're doing, right? So you take it out to somebody else to go do it for you. And sometimes when you take it out to somebody to do it for you too, they just do you what you need them to do. Sometimes you don't even know what to ask them or what to tell them. So I'm going to throw a little bit of light on this, on what we're going to be looking at. Point this over here. Okay? Right here we say, taxes is very simple. What we do, you work throughout the whole year, you work, you pay some taxes to Uncle Sam. At the end of the year, they give us that opportunity to get some of that money back from Uncle Sam. The only way you could do this is by you trying to reduce your standard deductions or to reduce how much money you say you work for the year. If you work $100,000, they give you the opportunity to show proof of so many good things that you did and reduce your taxable income. When your taxable income goes down, whatever you pay to Uncle Sam, if it was too much, Uncle Sam gives you some money back. If it wasn't enough, then you owe Uncle Sam. So that's what brings us to this whole aspect here of deduction. Here we look at, these are the standard deductions here for 2009. If you're married filing jointly, you get up to a whooping $11,400. So who says it's not a good thing to be married? It's a very good thing to stay married, guys. That's one of the very first secrets in America. Get married, if you're still single, start looking for somebody. You gotta get married and start saving some money. Right, Father?
That's right.
All right. If you're filing head of household, you get $8,350. Then if you're doing married filing separately, you get almost the same as being single. There are certain issues there that some two couples might decide, you know what, I don't like all that money that you owe, I want to do my own stuff separately, you do your own stuff separately. Probably is one of the worst, filing statuses because the IRS actually penalizing you for being married, but yet you want to be separate. And it's kind of weird, contradictory. Right? Then if you're doing, a qualifying widow, let's say your significant other passes away within the year, you get all the grants to actually still file, and you get the same deductions as if you were married. If you didn't do anything out of the realm, these are your standards. But if you did some good stuff, and you want to claim some more, it takes us over to where we're going to look at what we say as Schedule A itemized deductions. These are all the different things here that you could deduct. Sometimes some people don't know, you could go down the list: medical expenses, healthcare insurance premiums, state and local taxes, real estate taxes, personal property taxes, which will also include not only your house, you include your cars. We pay personal property taxes here for our cars here in Georgia when you go register your car. The amount you pay for your ad valorem is actually tax deductible. Some people don't know that. Mortgage interest and points, investment interest. Even if you have a safe deposit box, I don't know how that all adds up in there, but it's also tax deductible if you have a safe deposit box. I didn't know that either, but it's in there. So more stuff, if you give money to the church, cash gifts, non-cash contributions to the Goodwill, Salvation Army, unreimbursed employee expenses, job travel, union dues, job education, and this is big for now. All of us are looking for a job, right, Adrian?
Right.
So your job search is running up and down from Ohio to here, all that mileage will be tax deductible and any money that you spend. So the list continues here, tax preparation fees. From 1 year to another, how much money you pay to prepare your taxes that year, it is actually tax deductible the following year as well. So make sure you keep all your receipts. All this stuff here that has been listed, all of them has to do with you making sure you have proper record keeping. Keep your records. Whatever you do, make sure you have records. If in case the IRS contacts you, you will say, yes, I have this, I have that. So this is Schedule A for regular folks. It continues all the way here. Tuition fees, whole credit, travel away from home, total mileage for the year. You know, we have situations where some people have multiple jobs. They leave from one job and they go to another job. The mileage in between one job to another is actually tax deductible when you're running around from one place to another. So you could add up all those things, education credits as well. So this is just for regular folks. So all your Schedule A stuff, that's for regular folks. But now we're going to step it up a notch a little bit where you're going to look at the opportunities when you own your own business. Some of the people here own their own business, it's a good thing. Okay, small business, home business, big business, whatever the case, Uncle Sam's actually credits you for keeping the economy kicking. We always hear that small businesses keep the place running, right? We need a whole bunch of those. So Uncle Sam gives you a much wider range of deductions now that you could do, which is called the Schedule C deductions. So most of those you get a 1099. So you're almost working as a subcontractor. Either you pay yourself or you pay some other people. You don't have the opportunity to take out the FICA and the Social Security. You just give them a 1099. You go pay your own taxes the way you want to. Now you have a wider range of deductions that you could do, from advertising, making business cards, car and truck expenses. If you own your own business, your car breaks down, it goes to the shop. All that stuff, all the receipts are all tax deductible. But if you didn't own a business, you can't do that. You know, your boss doesn't care whether your car broke down or not. That's not your issue. But most of the time, if you own your own business, all those stuff are there. Mortgage interest, if you're running your own business out of your own home, part of your mortgage will actually go under as a business expense. If you buy any containers to use for your business, if you own a cleaning business, to buy chemicals, all those things, they're all tax deductible. So, you know, Schedule C gives you a much wider range. Your taxes, your licenses, meals and entertainment. Those of you who actually do, let's say you do Avon or you do Mary Kay and you invite people over to the house and you offer them refreshments and all that, all those are all tax deductible. You need to make sure you keep all your records straight. Your utilities, wages paid, if you pay out anybody that helps you out or works for you, all that is tax deductible as well. Cost of labor, commission and fees, employee benefits, if you're giving out any healthcare services or anything like that. Then this is also another component added for business people. If you're running this business out of your home, sometimes you go to the nitty-gritty where you can measure your square footage in your house, how much of that is allocated out for business. You could use that percentage off of your mortgage and all that and also make it tax deductible. So your real estate taxes could apply here too, insurance, repairs and maintenance, utilities, date placed in service. So always make sure you record yourself down. When did I start doing this business at my house? Because the IRS is going to need to find out. If you're doing home business, you're doing any multi-level marketing businesses, the IRS will look at it. If you do the first year, you claim so much loss, which is okay. Most businesses will not be productive in their first year in business. The first-time home buyer credit that ran from, 2007 up to now, is still current. So if you're still looking for $8,000, that's some good chunk of money that you can invest immediately in Cameroon and make a big difference. That's lots of money. I've seen people get that check, they look at it, they can't believe it. All of a sudden you buy a new house, you amend your taxes, Uncle Sam sends you $8,000. So it's still good. So if you got into a buying contract by April 30th of this year and you close on your home by September 30th, you could actually include this tax credit on your taxes for this year and you'll still be eligible to get your $8,000. Pretty cool. I've seen people get that check and they just blow up. You know. Then energy credits, talking about going green, that's the new wave or how things are going. whatever changes you make out of your home, inside your home, are also credits that you could get too from the IRS. So if you actually upgrade, let's say you change your exterior windows, your doors and all that stuff to make your house a little bit more energy efficient, you could actually claim up to $1,500 over 2 years. So you're claiming 30% of your qualifying expenditures that you spend to equip your house for all this good stuff. So it's a good way, you know, going green, fixing stuff, make sure we're not losing how much energy. Our environment is changing the fastest way possible. So the sooner we start getting the grips of it, hopefully we might be able to save the planet before we all go under. So this is inside, you know, inside the house, new installation, a new furnace, perhaps a new water heater. And it takes us as well, when you take it to the much wider scale, where now you're doing solar energy, wind power. So long as it is qualifying expenditures, you get the credit. So you could do a wind power, solar, even geothermal power. I know some people might not know what geothermal power is. Pretty neat stuff that they do going green these days. That way you don't have to rely on Greystone and Red Power and all this people. You could do your own stuff. And the neat stuff about these forms of energy, you could produce so much energy to the point where you're actually selling some back to the, you know, to your power stations. Then they start sending you a check every week or every month. I think that's pretty cool. Okay? Then last but not least, it always pays to go to school. So education credits are always available for you. And as of last year, with the President Obama's push on having everybody going back to school, they had the American Opportunity Credit. That was a new education credit that came up. So whatever school or whatever amount of money you spend out for school will be tax deductible. You can claim it. We also have the Hope and Lifetime Learning Credits. I love this Lifetime Learning Credits. It gives you that opportunity to always keep learning something. You know, just always don't stay still. There's always so much stuff that we could learn out there, whether it's something that you went to school for or not. You know, there's always room for you to be knowledgeable and add more stuff. Student loan interest deductions. I know several of us are paying student loans still. That interest money is also tax deductible. So make sure, they always send you that piece of paper, don't lose it. Whenever your stuff for taxes come in, get you a folder and put all this stuff in together. All that money that you spend, those of you sponsoring kids in colleges, all that money, whether it's room and board or tuition money, all that stuff, books, all that stuff is tax deductible. So your tuition and fees in there. So that kind of wraps up. Am I good on time? Okay. So that kind of wraps up there. So in preparing your taxes, always take your time to prepare your taxes. Make sure you gather all your information that you need. Don't leave some stuff at home. Ask as many questions as possible. Make sure your preparer is well informed. And the only way you're going to know if your preparer is well informed is if you ask the questions. If you don't ask questions, they're not going to do anything, or they will not offer you something, or they might not ask you more questions. When I prepared, somebody's taxes have become almost like an interview. By the time the person gets out, it's like, whew, never been asked that many questions just preparing taxes. Your tax preparer must be able to ask you as many questions as possible to give you the best service possible. Don't stress, it's not all that bad. So that wraps me up. So I guess we're going to have questions.